The Trump tariffs are now fully implemented, and as many expected, the stock market did not react well. A 25% tariff on goods from Mexico, Canada, and China has caused a wave of uncertainty, with the markets dropping significantly. But what does this mean for the U.S. economy, your personal finances, and your investments in the stock market? Are there any opportunities in the chaos? In today's video, we're diving deep into the situation and breaking it all down for you. President Trump has officially signed a set of tariffs into law. This includes a 25% tariff on products coming from both Mexico and Canada and an additional 10% tariff on Chinese goods. Now, you might be thinking, wait, didn't China already have a 10% tariff earlier this year? And that's correct. There was already a 10% tariff imposed on Chinese goods, but now it's being ramped up. That's a significant escalation, and it's causing a ripple effect around the globe. Of course, the countries involved aren't taking this lightly. In fact, both Canada and Mexico have responded with their own retaliatory tariffs. Canada's Prime Minister Justin Trudeau called these tariffs a dumb thing to do, and announced that they would implement a 25% tariff on U.S. goods, potentially as much as $30 billion worth. But they've also hinted that if these tariffs remain, that cap could rise to $155 billion. China, not wanting to be left behind, has also retaliated by imposing tariffs of up to 15% on U.S. agricultural imports. That includes things like pork, soybeans, chicken, and beef, products that are central to American farming. As for Mexico, the government hasn't officially announced retaliatory tariffs just yet. But we can expect them to do so soon, and there's hope that diplomatic channels will prevent them from escalating tensions even further. Why are stocks falling? The big question everyone is asking is, why are stocks falling and what does this mean for the economy? Well, one of the major reasons for the dip in stock prices is that many companies rely on international trade. Major retailers like Best Buy and Target are already feeling the heat from these new tariffs. Take Best Buy for example. The company sources about 55% of its products from China, and another 20% comes from Mexico. When tariffs hit these countries, it means higher costs for Best Buy, which could end up getting passed down to the consumer. Best Buy has already warned that it's impossible to predict how much consumers will end up paying in the coming months, but the impact is certainly expected to be felt in Q2, Q3, and Q4 of this year. Target is in a similar position. The company heavily depends on Mexican imports, particularly fruits and vegetables, especially during the winter months. Target CEO has already stated that they may have no choice but to raise prices on fresh produce, possibly as soon as this week. The impact of tariffs on consumers and businesses. So, what does this mean for you as a consumer? Well, tariffs essentially function as a tax on imported goods. If you're purchasing something from Mexico, China, or Canada, you'll end up paying a bit more because companies will have to adjust their prices to cover the higher costs caused by the tariffs. This price increase will be felt by you and me, the everyday consumer. The question that a lot of people have right now is, how much will prices go up? And that's difficult to say. Best Buy might not raise prices immediately, while Target may start raising prices within the next few days. It's still early in the process and different companies will react in different ways. However, what we do know is that businesses are facing a tough decision. Either absorb the higher costs, cutting into their profit margins, or pass those costs along to you in the form of higher prices. Both options are not ideal, and it's one of the reasons why many are concerned about a potential slowdown in the economy. The bigger picture: inflation, recession, and long-term impact. One of the biggest concerns surrounding the tariffs is inflation. If businesses are paying more for goods, they'll have to raise prices for consumers. This means inflation could continue to climb, which is already a worry for many. With inflation rising, it could squeeze consumers even more, especially as many are already struggling with higher living costs. Another concern is the potential for a recession. If businesses start raising prices too much and consumer demand starts to drop, it could have a cascading effect on the broader economy. Fewer people will spend money, businesses could see lower profits, and the economy could go into a recessionary period. But here's the thing: the future is uncertain. While there are definitely risks, it's also possible that the economy could adjust and adapt to these changes. The truth is, we've been through tariff wars and trade disputes before, and the markets have always bounced back. But the impact in the short term is what concerns people the most. Investment opportunities and uncertainty. So, if you're an investor, what does all this mean? Well, the initial reaction from the stock market might seem dramatic, but this is a time when savvy investors can find opportunities. Markets are going to be volatile, and volatility creates chances for those who are paying attention. Let's talk about gold, for example. When the market dips and uncertainty rises, people tend to flock to safe haven assets like gold. And guess what? As the stock market was falling, gold prices were climbing. So, investors in gold were actually benefiting from the turmoil. This is one of the reasons why having a diversified portfolio is crucial. While some assets might be down, others like gold could be on the rise. Real estate is another asset class that has been thriving despite the market's volatility. According to recent reports, home prices have hit new all-time highs. Investors in real estate are seeing significant returns, even as the stock market takes a hit. The key takeaway here is that different markets don't always move in the same direction. When one market goes down, another might be on the rise. The power of diversification. Diversification is a term you've likely heard before, and here's why it matters more than ever. When you spread your investments across different asset classes, stocks, bonds, real estate, gold, and even cryptocurrencies, you're better positioned to weather market ups and downs. The best investors know that different assets react to market conditions in different ways. Gold might rise during periods of economic uncertainty, while stocks could be down. Real estate might hold steady when the stock market crashes and vice versa. In fact, if you look back at history, you'll see that when the stock market was struggling in 2020, real estate prices were surging. Similarly, when the stock market crashed in 2022, gold prices soared. Understanding these cycles can help you stay balanced and minimize risk. Staying calm and finding opportunities. I get it, market volatility can be scary. The headlines scream about the latest downturn, and it's easy to get caught up in the fear. But here's where you need to stay calm and keep your eyes open for the opportunities that come with market chaos. Emotional decisions rarely lead to long-term financial success. As Warren Buffett famously says, "Be fearful when others are greedy and greedy when others are fearful." When everyone else is panicking, it could be a time to buy. When the market is rising, that's when you should be cautious. Wrapping it up, the importance of staying informed. So what should you do now? First and foremost, stay informed and understand that markets go through ups and downs. These market crashes are part of our economic system. If you're looking for ways to take advantage of the current situation, consider diversifying your portfolio, paying attention to safe haven assets like gold, and keeping an eye on sectors that could benefit from the tariffs, such as logistics and manufacturing companies that could be moving production to the U.S. Don't forget to subscribe to my channel and put on the notification button for more updates.